Hi, this is Saim. I'm going to be answering the Chapter 1 case questions for BA668. First, I'm going to be reading out the closing case for Chapter 1, and then I will proceed to answer the questions. So, the case is called East Coast Yachts. In 1969, Tom Warren found East Coast Yachts. The company's operations are located near Hilton Head Island, South Carolina, and the company is structured as a sole proprietorship. The company has manufactured custom, mid-size, high-performance yachts for clients, and its products have received high reviews for safety and reliability. The company's yachts have also recently received the highest award for customer satisfaction. The yachts are primarily purchased by wealthy individuals for pleasure use. Occasionally, a yacht is manufactured for purchase by a company or for business purposes. The custom yacht industry is fragmented with a number of manufacturers. As with any industry, there are market leaders, but the diverse nature of the industry ensures that no manufacturer dominates the market. The competition in the market, as well as the product cost, ensures that the attention to detail is necessary. For instance, East Coast yachts will spend $80 to $100 a day, $1,800 on hand buffing the stainless steel iron, which is the metal cap on the yacht's bow that conceivably could collide with a dock or another boat. Several years ago, Tom retired from the day-to-day operations of the company and turned the operations of the company over to his daughter, Larissa. Because of the dramatic changes in the company, Larissa has approached you to help manage and direct the company's growth. Specifically, she has asked you to answer the following questions. The first question would be, what are the advantages and disadvantages of changing the company organization from a sole proprietorship to an LLC? I'm going to be answering this question right now. The the simplest type of business to launch is a sole proprietorship, which is business owned just by one person. Since there is only one owner of the company, all business profits are kept by the sole proprietorship. However, a sole proprietor is also liable for any incurred debts, liabilities, or legal problems. A single owner may benefit financially from the business while also taking the chance of jeopardizing their own assets. In this situation, a sole proprietor may benefit from converting their business to a limited liability corporation (LLC) in order to putting their own personal assets at risk in the event of any problems. Okay, I will be continuing. Uh, just a minute there. As I was saying, I'll be continuing right now. Uh, An LLC combines the tax requirements of a corporation with the restricted responsibility for the owners of a partnership. The, the need to file additional paperwork with state, pay higher taxes, and ensure that an LLC complies with all state requirements would be drawback of switching to an LLC. Now I'm going to be proceeding to the second question, which is, what are the advantages and disadvantages of changing the company organization from a sole proprietorship to a corporation? I'm going to be answering the second question now. Although a corporation can have multiple owners, it is still a legal entity that can be owned by just one person. Similar to an LLC, A corporation does not jeopardize the assets of the owner. The corporation has the ability to make decisions on its own and can litigate, possess property, borrow money, and can take out debts. A corporation requires the preparation and filing of articles of incorporation and a set of bylaws with the state. But a single proprietorship does not. This makes the process of forming a corporation much more difficult than that of a single proprietorship. A corporation will forfeit the debt in the event of financial difficulties, not the proprietors. Now I'm going to be proceeding to the third and final question. Ultimately, what action would you recommend the company undertake and why? This is the third and final question, which I am going to be proceeding towards right now. Dan and Lynch could invest in a larger production space and keep the required funding if they switch from being a sole proprietorship to an LLC. In order to create this business, Dan and Lynn abandoned their former jobs. As a result, as a sole proprietor, they are only able to get financing based on their own personal wealth and not that of a business. In order to satisfy demand, Dan and Lynn have now hired extra workers. As a result, they are now personally liable for any employee-related losses and risk losing their own assets. Dan and Lynn would be smart to safeguard their private assets from liabilities as they hire more staff, and hiring more staff would definitely be something that they can look forward to, as it will help them.